Hi, welcome back to the show. Quite a U-turn of sentiment for the market actually. So it's come off quite a bit from that 59.80 level all the way to 59.20. So it's what, a 1% drop from the highs of trade. And it's not that the global markets have been under pressure or anything. Europe is still where it was. So the sentiment turn is pretty local in nature, you'd have to say. European markets are still holding up in the green. Gautam Sinha Roy of Motilal Oswal Securities joins in to talk about that. Gautam, this is the big debate in the market, whether we are headed for a slide from here on, or will we just enter into consolidation phase? After putting all the triggers together, what's your sense of which way the market could head?
As of now, we are looking at a consolidation only because we don't have a clear directional call yet. The cues don't support any particular call on that sense. But couple of things which are quite interesting is the kind of premium that the supposedly high quality stocks in Nifty and Sensex are commanding now is quite high and continues to increase. So that's one thing, and the second interesting part is that QE rollback, or QE scale down rather, has become a very important talk globally, and especially for countries which have a negative CAD, which have problems with their current account deficit like India. This could be a big concern. So, and the impact on the rupee is also visible already. So these two factors are kind of new trends for the Indian market now. So we'll have to really see where it goes from here, and I think that a lot will be determined by global factors rather than just local factors going forward, both from a macro stability perspective as well as from market performance perspective.
Gautam, hi, afternoon. The Motilal House has come out with a report on Bata, and that's one of the favorite stocks in terms of the broader markets today. Can you just take us through your call on Bata and what resulted in the 20% upside that you are expecting from current levels?
See, Bata is one of the stocks where we have seen strong growth, being one of the favorite consumer discretionary stocks in India, as well as the fact that this is a sector which is in favor, especially high quality MNC names within this sector. And valuation wise also we are seeing some sort of discount to the broader sector in general, which is where the upside specifically comes from. But it's also a story about under-penetration and likelihood of strong earnings as well as dividend growth for a sustained period of time, which we expect from Bata particularly, and other such consumer discretionary companies where penetration levels continue to be low.
Okay, just stay on. We'll just come back to you in a bit. In the meantime, our research analysts have also joined us now to tell us about what stocks they've picked up. Ushang, let's start off with you. You have Bata on your list. What else are you picking up on the stock?
Earlier it was expected that there was this EGM which was supposed to happen in the company, and they were going to release certain dividends, but later on, as per Cogencies, the news which came in that the company will be considering a stock split as well as a bonus issue going ahead in FY14. Again, apart from that, Bata India has said that they have initiated steps to merge subsidiaries companies with itself as well. The stock has actually gained around 5.5% odd in trade today. Also, the volumes are pretty much big. Over almost 13.5 lakh shares have already exchanged hands on both the exchanges combined versus a 2 weeks average of almost 1.6 lakh shares. So this is a very huge spike which is coming over here. And again, there was this report we were talking just about from Motilal Oswal on Bata, where they have given an upside of around 20% and given a target of almost 975 rupees. And here they have been expecting that there will be strong earnings as well as the growth stability of the company likely going ahead is pretty good, and also the focus on aggressive growth which is led by the tier 1, tier 2 and tier 3 cities as well as rural India will contribute to the gains ahead. Moreover, they also believe that the company has good cash on books position, almost 190 crore odd levels of cash, and the capex continues to be low, around 200 crores over the next 3 years as such, and this lower capex coupled with free cash flows is expected to be higher to the tune of almost 590 crores is what they state over CY 12 and 15 earnings as such. On that note, over to you, Nigel.
Thanks for that, Ushang. The stock that I'll be talking about will be Usha Martin. and that stock really was trading at around 3% up, but as the markets have gone flat, this stock as well is up just 1% odd. Now this is on the back of a deal that it's inked with the Japanese steel maker, which is Aichi Steel Corporation of Japan. So this would help them with regard to the operational efficiencies as well as with regard to the product quality. Remember, these Japanese companies, they do bring in their technical know-how, and that's what will really help Usha Martin. It further goes on to state that the reports go on to state that they would be looking at a larger presence in the passenger vehicle segment and also in the wire rope segment. So clearly this has been viewed as a positive, given that the steel industry on the whole has been under pressure, and any kind of deals that would be inked would definitely help with regard to the efficiencies as well as with regard to the quality. That's it from me. Pragya, over to you.
Well, thanks for that, Nigel. The stock that I've picked today is Lanco Infratech. The stock is up 5% in the day's trade and buzzing on good volumes. As always, you know, there is a little bit of news and the volumes just about spike up on this counter, given that it is almost just a 10 rupee stock. You know, interestingly, the company's EPC division has won an order from GIPCL, which is Gujarat Industries Power Company Limited, an EPC order for its 600 megawatt lignite thermal power plant. These orders worth 3,300 odd crores. Now, you know, importantly, the company's EPC order book stands at 26,300 odd crores, and this is a huge ticket order. My chat with the analyst is indicating that this is probably a high margin order, which is why you've seen this news come in the morning, and stock has been buzzing, you know, ever since. Interestingly, you know, the company has indicated that typically power and construction orders, almost 80% of these orders are the internal orders which Lanco's EPC division is executing at this moment. So any sort of external order is definitely a good news as far as the stock is concerned, given the fact that there will be payments, etc. Given the fact that it's also a public company that they have got this order from, so some sort of delays on payments, etc., those kind of concerns will be negated as far as this particular orders is concerned. Management had indicated of delays that they are facing as far as this EPC segment is concerned. Remember, the margins in this segment have just been languishing in that single digit sort of region, except for Q4, where of course they had accounted for a one-time gain, which is why we saw the margin spike up, but definitely a good margin order and a very huge quantity, given the fact that the order book stands at 26,300. This is good news for Lanco, and the stock is of course reacting to that. That's it from us. Back to the studio.
All right, thanks Pragya, Nigel, Shank for that. Just watch out for the markets. It's currently down around 0.4%. We're testing 5,900 at this point in time, and there are some important clarifications, or rather import alerts which have come in from the RBI with regards to gold imports. We do understand that all letters of credit for gold must be, it'll come up for you again, but all gold imports must be on a document against payment basis. Remember, they are clamping down on gold imports simply because of the high amount of current account deficit and a lot of gold imports despite gold prices falling, and that was evident in the April trade deficit data. They have tightened norms for gold imports by nominated agencies, so that would include a couple of parameters which they've got. All letters of credit for gold import only against 100% of cash, so that would be definitely to curb in the gold imports in order to actually control the trade deficit data, hence the current account deficit. Mr. Tulsian, your thoughts with regards to these norms which have come out by the RBI on gold imports, and they will be effective immediately?
See, Ekta, I think Finance Ministry is rightly, you know, taking that step, and they have said in the past also that country cannot afford to import such a high quantity of gold, and the non-fund based limit, you know, or the facility which was given to the gold importer in the form of letter credit, generally, you know, where you have a margin payment just of 25% on an average, has been removed. So now any importer, you know, who has been importing the gold has to pay 100% as the upfront cash margin. That means it is like, you know, you are not availing any kind of non-fund based limits for importing the gold. So this will definitely be, you know, curtailing the gold import, because that is the only solution in front of the Finance Ministry to curtail the current account deficit. Because now, after having controlled the fiscal deficit, the next debate or the next concern which has been hanging over, you know, on the country's ratings and outlook and all sort of things is the current account deficit. So there is no other way out. You can't curtail your or you can't control your current account deficit where the $15 billion of crudes are imported every month. So this is the only area which has been left, and I think the government is moving on the right path.
This is quite important actually. We all know that the gold imports have gone up drastically in the past many months, and despite the import duty going up all the way to around 6% or so, the finance ministry has been unable to curb the demand for gold. In fact, in the month of April itself, the gold imports went up almost 140% to about $7.5 billion or so, and these are the latest guidelines that the Reserve Bank has come out with in order to bring down the gold imports. Mr. Tulsian, would any of these stocks get impacted? I mean, I don't know whether Titan does any importing, but it's down about 3% odd. Is this just sentiment reaction?
I think, Sonia, everyone imports that, whoever, maybe the jewelry makers like Gitanjali, Titan Industries, so definitely this will increase the working capital pressure for them, as we have discussed, because generally these jewelers, if you really see, they sometimes, have the sanctions of the higher non-fund based limits rather than the fund based limits. For example, if you see if you take these companies, if they have the fund based sanction of about 500 crore, they may be having 750 crore to 1000 crore as the non-fund based limits, having sanctioned by bank. So definitely this will cause a huge pressure on the working capital for these companies, and all the jewelry makers are going, the large jewelry makers are going to get affected.
But okay, so those are the few sort of details that we're getting at this point in time. The markets recovered from the day's low, but nonetheless the sentiment seems to be quite weak at this point in time. So Nifty is down around 0.2%. Mr. Tulsian, in terms of your past talk with consumers and investors, etc., do you generally see gold demand go down in case of these imports coming through, or does it just irrespectively remain high because of India's strong love towards gold?
See, Ekta, unless until we have the alternate forms of investments, available to the Indian people, for making investments, I think the gold demand is going to remain quite robust, and that too if the prices falls, because we have seen that happening, that when the prices have corrected, probably, first people thought that there may be tapering of the demand, but that has not happened, because maybe at a lower level of 25,000 rupees per 10 gram, people have found that to be a lucrative investments, and that has really changed the thinking, or maybe the mindset even of the analyst also, that when the prices falls, the demand also falls. So, maybe unless until you have the alternate form of investments, because people have been, largely going in for investments into the real estate and gold, if you really see the pattern of the last maybe 6 to 10 years, because rightly so these both asset class have really given them a very good return. So maybe if you don't have the conducive investment atmosphere in the form of alternate investments, the demand for the gold on every fall is going to get increased.
Okay, let's get an analyst who tracks this precious commodity quite closely. Kishore Narne of Motilal Oswal joins in to talk about that. Kishore, some more tightening norms that have come in from the Reserve Bank to bring down gold imports. What are you making of it? All gold imports must be on a document against payment basis. All letters of credit for gold imports are only against 100% cash, etc. Do you think this will bring down the demand?
Yes, Sonia, it's not about the demand. Actually, government is trying to curb imports rather than demand, because demand is more or less derivative of how people want to deploy their wealth. So government is more concerned about the imports. So I think whatever the means of financing of imports, or whatever the leverage which can be provided to imports, governments ought to cut it down, and that's what they have done when they have stop this 180-day scheme also, that most of the jewelers who have been leveraging on that scheme has been cut down, and now it's 100% paid LC, means obviously everybody has to put upfront cash, and most of the jewelry segment is not having enough cash. Actually, it's a liquidity crunch in jewelry market because of the pricing. So definitely it will impact the amount of gold imports. But one thing it would happen is that it would increase the spread between the international gold and domestic gold. So domestic gold will be much more expensive than the converted or landed price, whatever you say.
Okay. Kishore, so in your mind, how much correction do you expect in terms of gold imports because of this?
Gold, I think basically we are looking at a 32% cut from the last year's import. So at least 1/3 will be down due to various measures. You cannot peg how much for what measure it will be. But overall what happens is in a falling market, if we see another fall here in gold prices globally, then you see that the buyers will not be there, because most of the buyers buying which happened in April was being accumulated buying which has been postponed due to the high prices from November to Jan or so. But that trend is now over. So now you need a fresh triggers for the buyer to go and buy gold. So, but at this point of time, I feel that the investors will fade away from the gold.
So you did say that the spread between international and domestic will widen. So what do you see the domestic prices settle at? How do you see them from here?
Domestic prices actually are a derivative of both the gold prices internationally as well as the rupee dollar relationship. So I think at this point of time they have been supported by the weaker rupee, which we have been seeing for the last month or so. I think almost 6% weakness in rupee has caused gold prices to hover in this current range. Otherwise we would have been almost 2,000 rupees lower from the current level. So I think still we would be going down to around 24,000 levels for this year probably, and should consolidate in between 22 and 24 towards the end of this year.
All right, Kishore. Thanks so much for stopping by and giving us those details. That's the word coming in, but Titan is down about 3.5% or so. So that stock is reacting quite negatively.
Sonia, actually, we just have some data. The reason why the finance ministry was so headstrong in terms of possibly putting these imports on gold was simply because we imported 162 tons of gold in May, and in April we imported around 142.5 tons. So the demand sensitivity in terms of gold prices falling for the Indian market is completely the opposite. We increase our consumption as opposed to any sort of prices falling or any. So maybe this was the need of the hour in terms of any sort of import. So to put things into perspective, the month of May we imported around 162 tons of gold. So that possibly spooked the government in terms of trying to be a little more.
That will clearly exert quite a bit of pressure on the current account deficit as well. I was looking at the numbers. The gold imports, like you mentioned, have gone up some 140% and standing at somewhere around $7.5 billion worth of gold imports. So that's quite a bit to make anyone nervous about the current account deficit, etc. But we should actually delve deeper into what the implication will be for a company like Titan. We'll try and do that in a bit, but before that, let's take a break. Markets are still actually choppy, so 59.20 is where the Nifty is. We'll come back.
Hi, welcome back. Don't know what it is which is plaguing sentiment, but the markets are definitely weak at this point in time. So 59.20 is currently where the Nifty is at. So do watch out for that. The broader markets are not losing their amount of fervor as compared to the Nifty. So there is a degree of outperformance which is seeping into the mid caps as opposed to the frontliners. They're managing to hold their head above the water with gains of around 0.4%. Do watch out for the banks, because Axis Bank is down 2.5% and it's rate sensitives again which are taking a knock. So Tata Motors is down around 3.3% at this point. SBI is showing a cut of around 41 rupees. HDFC is down around 15 odd rupees, and even Maruti, again from the rate sensitive basket, is showing a cut of around 1.5 odd%. So it is definitely a combination of banks as well as maybe even oil and gas, because Reliance is currently at Reliance and GAIL, both of these stocks are pretty much trading in the red at this point. Both these stocks are showing cuts of anywhere between 0.5% to 1% at this point. The jewelry stocks on your screen, Titan down around 3 odd%, Sri Ganesh Jewelry also, which is down around 2 odd%. Maybe there will be some amount of impact with these gold import curbs coming through. Gautam, you've heard us talk about it. What would your opinion be with regards to the gold import possibly being curbed going forward by the RBI? And additionally, what are your thoughts with regards to the current account deficit?
I think from a current account deficit, this is another worrying factor that gold imports have been very high, and they have been sticky for 2 consecutive months. So somewhere the government and the RBI has to step in and try to curb in whatever fashion they can. So that is quite well understood. The other part is, why does demand continue to be so sticky? I guess as we were discussing earlier too, gold and real estate have been 2 asset classes which have really done well for Indian investors, especially in the last 5 years during the recession era. But we'd say that at some point we'll see if gold prices continue to keep coming down. Investors' belief in gold as a good investment will probably go away at some point, and I don't know at what point that will happen. But if there is another round of sharp fall in gold prices, then the demand will definitely take a knock, and that is what should be the next development as far as gold is concerned. And in terms of the impact of that on stocks, definitely the gold retailers are running a risk of volume slowdown because of that factor. But coupled with that, probably they would make up partially through higher margins, because if gold prices are coming down, they would probably be able to get higher markups on their cost. So they have some mechanism for compensating lower volumes probably too, and lower prices, but definitely not a big positive for them from a near-term point of view.
Okay, just about 10 more minutes to go and we'll be done for the day. 59.20 is where the Nifty will close. So it will be a disappointing session. We've lost all of our gains that we started off with. So Darshan, any calls on individual stocks that you would want to buy now and sell tomorrow?
Yeah, but just quickly on the gold issue, if gold comes to 24,000 or 22,000, what will you and Ekta do? The same thing no, it's not a joke.
No, I won't do any more. Only Ekta will do that.
Every Indian housewife is going to buy more. I know. So we should understand the mentality of the Indian people rather than be economists of a different kind. So this is not going to go away in a hurry. I think gold jewelry and jewelry companies are excellent buying opportunities. They are in the dumps, and today if you were to buy either Titan or Gitanjali, probably tomorrow morning people will realize that lower gold prices mean more profits for these companies.
But on that subject itself, Sudarshan, I mean, and not for any personal interest or anything, but where do you see the gold prices headed? I mean, from 27,000, our earlier guest was talking about levels of 24,000, etc. What's your view?
That's the same view, 24,000. Now the problem is the rupee dollar parity. That's disturbing this valuation. Otherwise, we would have probably been lower, as he also was saying. So it's difficult for me to calculate what will happen if the rupee goes to 60 and gold prices internationally come down, whether we'll remain here itself. But otherwise 24,000 was a very reasonable target on the downside.
Okay, so we're just about static at 27,000 rupees. Let's see whether we can fall to levels of around 24,000 on gold. But otherwise, it's picked up pace actually for the broader market. So up around 0.6% currently for the mid-cap index. Maybe it'll be a bit of a degree of an outperformance for the mid-caps as compared to the frontliners today. So Darshan, specifically coming down to a couple of these pharmaceutical stocks which are showing a lot of fervor in today's trade, which one would be your pick from, say, the likes of, Denmark Pharmaceuticals and Aurobindo, or maybe even a GSK Pharma?
Well, I had picked up Oro Pharma at 250 when we said what can we buy for the last 40 minutes. And even if we want to buy something now, Oro Pharma's charts are very attractive. A rally, a small pullback and a resumption of that rally. And it's ignoring completely what the Nifty is doing. I would go for Oro Pharma.
Okay, up about 5% for Aurobindo Pharma today. Some denials coming in from Idea Cellular over there. They say that no, they are not in talks with Malaysian-based Axiata for any tower asset sales, and no, the Axiata management is not coming down to India to continue those talks further. All of those talks are just speculative in nature, and the stock is actually coming off from the high point of trade. Axiata, remember, holds nearly 20% stake in Idea Cellular as one of the biggest shareholders. So they won't be buying any more stake. That's the word coming in from Idea. They won't be looking to sell their tower assets to Axiata. But Sudarshan, just a quick comment on the stock specific action for tomorrow. I was asking you whether you would buy anything today and sell tomorrow, apart from the stocks that you just spoke about.
No, then there's nothing to buy. I spoke about a few stocks, and what you want to do is to sell something and then cover up tomorrow. Yeah, I don't see the buying opportunities here. So you could consider selling Reliance. You could consider selling Axis Bank. I don't think the BTST trades are, except for the exceptional names, the BTST trades are on the sell side today.
Okay. Gautam, what would your opinion be on the new bank license clarifications that came out yesterday? What did you make of it, and which are the stocks that you would be possibly bullish on from current levels?
See, based on the guidelines and clarifications that we have seen, we continue to see a strong chance for a few of the corporate houses sponsored financial NBFCs that are there, including Mahindra and Mahindra, Tata Capital, L&T Finance, and on the PSU side, probably a Power Finance or a RDC. Those are the kind of names which we believe have a good chance of getting the bank licenses, but it will be a long run process, so it's not a very near-term trigger, but when it does happen, it's obviously a big positive for the ones that do get the licenses. So probably a basket of these stocks would be a good approach, but you really have to hold on to it to get meaningful benefits out of this.
Okay, we will wrap up the day and the show on that note. Just about 3.5 more minutes to go. Today has actually been a disappointing session. So we came off 1% from the highs of trade. The headline index is just managing to hold on to 5,900. When we started off trade, we had positive global cues. In fact, those global cues lasted through the day. Even Europe was up in the green, but our markets have not shown any kind of conviction on the upside, an indication that there are still plenty of traders who are ready to short this market at every opportunity. In terms of individual stocks, banks actually have been under pressure today. So all of your heavyweight banking names, be it names like Axis Bank, the Bank Nifty itself was down about 1% or so. A couple of other names like HDFC Bank, HDFC, etc. have also been in the red. And if we can just get a look at how the PSU banks have shaped up, then you'll get an indication of the pressure that we got over there as well. In terms of other stocks, we've had a lot of these rate sensitives under pressure, not just banks, but some of the other heavyweights as well. Ekta, you want to just take me through them? My computer's not really working right now.
Okay, I'll just take you through the frontliners at this point in time. Like Sonia mentioned, it was a combination of rate sensitives which actually really took a bit of a downtrend for the market. So it was Tata Motors, which was down 2.7%, Axis Bank, which was down 2.5%, SBI, which lost around 2%, HDFC, which was down around 2% as well, and HDFC Bank, which lost around 1%. Within the real estate space, and which would be pretty much a reflection of rate sensitives, it was DLF, which was down around 1%, and we had a little bit of trepidation coming into the likes of even the Marutis of the world, so that one was down around 0.8%. It was actually broad-based weakness. So if you look at even cement companies, ACC, Ambuja, both those stocks were down anywhere between 0.3% to at least around 1% to 2%. We had HUL also, which lost around 0.2%, and TCS Infosys, I think both these stocks were in the red. So it was pretty much secular weakness, but it was aggravated by the Bank Nifty, which was pretty much at the low point of the day, and it was a combination of the heavyweights from the auto space as well. On the upside, it was definitely a defensive rally. So if you look at your four constituents in terms of your top gainers on the Nifty, it's Ranbaxy, which is leading the way, which is up around 4.7%, Cipla, which is up 2.5%, Dr. Reddy's, which goes home with gains of 2.5%, and Lupin, which was up 2% as well. In fact, Sun Pharma was in the green as well today, so that one was licking its wounds, was up around 0.8%. Oil and gas, like I mentioned, was a bit of a mixed session, you'd have to say. So Ken India was up around 1%. We had some amount of gains coming in from a couple of other heavyweights from the oil and gas space, such as ONGC, which was in the green, but then conversely we had Reliance, which was pretty much in the red, along with GAIL, which was trading in the red as well. ITC, your big heavyweight, was also in the green, so that actually stemmed losses. So that one was up around 0.5%, and L&T, which was at the high point of the day by the close of trade, so that stock was up around 2% as well. In terms of a backdrop from the global picture, it was pretty much a subdued session for us as compared to our European peers. So by the time we closed, the European markets were pretty much trading in the green, so there was some amount of gains coming in from the FTSE, CAC and DAX as well. In terms of the broader markets, let's just focus on that. The broader markets had a degree of an outperformance as compared to the frontliners. So the mid-cap index itself was up around 0.5%, and you can take your pick in terms of what you wanted to see gaining, and that was pretty much on the upside. For example, we had the entire pharmaceutical basket, which was up and about in today's trade. Aurobindo Pharma was up around 5%, Glenmark was was up 2.5%. We had gains coming from GSK Pharma, which was also, if I'm not mistaken, at a 52-week high or a lifetime high again. So that stock was up around 3% as well. Your banking hopefuls were at it. So GM Financial was up 2%. We had some amount of gains coming in from LIC Housing Finance. L&T Finance Holdings should come up for you as well. So that stock was in the green, up around 2% on that one also. Otherwise, it was also high beta which played its part on the upside. So GVK Power, Tata Power from the Nifty space, IVRCL, all of these stocks were pretty much in the green. Even JSW Ispat, there was some positive news on that one. So that stock was up around 3%. Nonetheless, is a sub 10 rupee stock. There was a lot of gains coming in from, a lot of these trading favorites, Kohinoor Foods, Liberty Shoes, Bata, where there is that AGM today. So, and that there was that buy call report also which came out on Bata, and Dishman Pharma also, which saw some amount of gains. Jewelry stock should come up for you. So Titan post those gold import norms which came out by the fag end of trade. It possibly reacted to that. Maybe it'll get a little more difficult for jewelry companies which are more domestic based in terms of businesses, etc., or running businesses easily. And otherwise, Titan was down around 2.5%, and Sri Ganesh Jewelry and the like should come up for you in terms of a reaction as well. On the downside, the others included ICRA, Dish TV, Evron, Educomp. A lot of these stocks were pretty much in the red. You'd have to say the mid caps managed to hold their head above the water, up around 0.5%. Volumes are okay, so 1.4 lakh crore is what we did in terms of participation.
Yeah, it was quite a disappointing session, at least for me, because the way the market started off, one would have hoped that at least after 2 days of a sell-off, you could see some rebound. But this is 3 straight days of a cut that we're seeing on the index. 59.19 is where the Nifty closes. So Darshan, for tomorrow, if you would continue to hold on to your short bias, what would your strategy be, and where would you place your stop loss?
Well, the strategy, stop loss is at 6,000, just above it. We couldn't cross it today, we couldn't cross it yesterday. And the strategy now is to sell on rallies. This 2-day choppy market movement was a substitute for an upside correction. That's a pity. But I would assume that the easiest way now in this market again would be to sell on any kind of a rally tomorrow.
Mr. Tulsian, what sort of clarification would you like to hear from Titan?
See, maybe that what kind of working capital pressure, because I don't think that there is any kind of confusion in terms of the offtake or maybe in terms of the margin. But yes, that what kind of working capital pressure it will really be putting on the company in terms of the inventory of the raw material, that is gold, held by the company. We need to have clarity on that, because maybe some of the company may opt to go for the spot purchase, which will also be take away or will eat away their margin. So whether vis-a-vis the higher price in the domestic market, or importing with the 100% upfront payment against the import. So what is the economics in respect to this has to be sought from the company.
Okay guys, thanks for joining us in this last 1 hour of trade. Quite a U-turn in terms of sentiment for the market. So we started off fine but gave up all of it and closed in the red, just hanging on to 5,900. Volumes are actually quite high, so 1.4 lakh crores for so early in the series because of the way we chopped around. But here's Sanjeev Prasad of Kotak Institutional